Have you ever wondered what people really mean when they say they own stocks? In simple words, a stock is a small piece of a company. When you buy a stock, you're actually buying a share of ownership in that company. Think of it like a giant pizza. The company is the whole pizza, and each stock is a slice. If you own a slice, you own part of the pizza. The more slices you have, the bigger your share of the company. Now, why would someone want to own stocks? There's two main reasons. 1. Growth. If the company grows and becomes more valuable, your stock usually goes up in price. That means you could sell it later for a profit. 2. Dividends. Some companies share their profits with investors by paying out cash called dividends. It's like a little bonus just for being an owner. Stocks are bought and sold on places called stock exchanges, like the New York Stock Exchange or Nasdaq. And you don't need to be rich to invest. Today, anyone with a brokerage account or an investing app can buy a single share. Of course, stocks also come with risk. If the company does poorly, the stock price can drop and you could lose money. That's why many investors spread their money across different stocks or use funds like ETFs to reduce risk. To sum it up, a stock is ownership in a company. You can make money if the company grows or pays dividends. Stocks are one of the most common ways people build wealth over time. So next time you hear someone say they own stocks, remember, they literally own a piece of that business. If you have gotten any type of value from this video, please consider subscribing and liking this video. See you in the next one. Bye.